Welcome to this explainer. Today, we're diving straight into one of the most dramatic corporate transformations we've frankly ever seen in small-cap defense tech history. We're talking about Ondas Holdings and their absolute blockbuster Q2 2026 earnings report. If you've been keeping an eye on the defense sector lately, you already know the massive shift toward autonomous systems is completely reshaping the industry. But what Ondas is pulling off right now, it's on a totally different level, and this latest quarter just raised the stakes for everyone involved.
Let's start with the jaw-dropping headline number that immediately demands your attention. 1,236% year-over-year revenue increase. Yeah, you heard that right. In the financial world, you rarely see triple-digit growth, let alone four-digit growth, unless there's a fundamental ground-up shift in the business model. This isn't just some incremental improvement, it's a completely revolutionized company.
To make sense of this deeply polarized stock, here's our agenda for this explainer. We'll quickly cover 1. Explosive revenue and growth. 2. The bear case of widening losses. 3. The bull case of strong fundamentals. 4. The wild card of flawless execution. And 5. Why this is high risk, high reward.
All right, Section 1. Explosive revenue and growth. To really grasp the Ondas thesis, you have to understand the sheer velocity of money coming through the door right now. The contrast is wild. Back in Q2 2025, revenue sat at a mere $6.3 million. Fast forward to a record Q2 2026 revenue, $83.8 million. To put that scale into perspective, Ondas made more in this single quarter than the roughly $50 million they generated in all of 2025 combined. And sequentially, that $83.8 million is actually up 67% from just Q1. We're essentially watching a company rewrite its entire income statement in real time.
So how exactly are they doing it? Well, this hypergrowth isn't just organic magic, it's driven by a highly aggressive M&A strategy. They've been acquiring specialized defense tech companies like Mistral, DZYNE Technologies, and Cyberhawk. By stacking these acquisitions, they've built what they call a multi-domain autonomy platform. And the step-by-step backlog growth is staggering, jumping from $68 million up to $457 million and hitting $613 million by the end of June. Now, when you factor in the DZYNE and Cyberhawk acquisitions that officially closed in Q3, the pro forma backlog catapults to a massive $757 million.
Because of this incredibly robust momentum in both realized revenue and that expanding backlog, management actually just raised their full-year 2026 guidance. They're now projecting a potential $525 to $550 million. Remember, they did about $50 million total last year. They had previously guided for $390 million this year, so raising the bar all the way up to $550 million, that's a bold leap that signals some intense internal confidence.
Moving right along to Section 2, bear case, widening losses.
Of course, scaling this fast rarely comes cheap, right? While revenue exploded, the net loss ballooned to $89.7 million for the quarter. And total operating expenses? They skyrocketed to $199 million. But wait, if you look closely at the breakdown of those operating expenses, a full $105.8 million of that $199 million total were actually non-cash charges. That includes $67.6 million purely in stock-based compensation. So, while the headline loss looks, frankly, terrifying, the actual cash burn is heavily skewed by accounting mechanics tied to how they're paying for these acquisitions and compensating their talent. Still, the bears have some very sharp teeth here. The bear case rightly points to the sheer operational complexity of absorbing multiple, diverse tech companies in such rapid succession. That integration creates severe execution risk. On top of that, there are real share dilution concerns. Management is actively seeking approval to increase authorized shares from 800 million up to 1.2 billion to keep funding this strategy. Add to this the fact that CEO Eric Brock recently sold around 2.38 million shares, and well, you've got some nervous retail investors, even though he remains a major holder. All of this culminates in a staggering 40% short interest. That means nearly half of the public float is actively betting that this company is going to stumble. Okay, let's flip the script. Section 3, bull case, strong fundamentals. Despite the bears, literally all 9 Wall Street analysts covering the stock right now rated a buy, with an average price target implying some major upside. And the immediate counterargument to the bears' fear of cash burn is their fortress of a balance sheet, holding roughly $1.4 billion in cash and short-term investments as of June 30th.
Even after using about $325 million of that to formally close on DZYNE and Cyberhawk in Q3, they remain incredibly well capitalized. They have the war chest required to fund this hypergrowth without desperately needing to run back to the market for immediate, painful dilutive financing.
Furthermore, let's look at what they're actually selling. Ondas is positioning its multi-domain autonomy platform right at the epicenter of a global defense transformation, as militaries worldwide re-architect around unmanned systems. Because of this, Ondas is boasting a combined commercial pipeline of $4.3 billion, alongside another $1.6 billion in strategic program potential. A huge standout there is the LASSO program, which represents nearly $1 billion in potential value all on its own. They've built this integrated platform spanning air, ground, and stratospheric solutions that very few competitors can match right now.
Which brings us to Section 4, the wildcard, flawless execution.
This execution wildcard presents a monumental challenge for the management team. To hit that newly raised lofty guidance of up to $550 million for the year, Ondas faces a truly steep uphill climb. Think about it. They delivered roughly $134 million in the first half of 2026. That means they have to deliver between $391 and $416 million in the second half of the year alone just to make good on their promises. That is a breathtaking revenue ramp. With Q3 guidance set at $140 to $155 million, Q4 is going to have to be an absolute monster of a quarter.
But management isn't backing down. In fact, they're leaning in. They are betting they can scale efficiently, and they're aggressively pulling forward their timeline for profitability. They recently announced that their standalone product companies actually hit adjusted EBITDA profitability 6 months ahead of schedule. Now they expect the core operating platform to hit adjusted EBITDA profitability by Q4 of this year, 2026, and they're targeting full consolidated company-wide profitability by Q4 2027. The bulls argue they're just front-loading expenses right now ahead of this historic second-half revenue ramp, and that operating leverage is about to kick in dramatically. Finally, Section 5, high risk, high reward.
Let's bring all of this together. The verdict really comes down to a few core factors. First, that 1,236% growth, undeniable. It's not a fluke, it's backed by a $757 million backlog and a $1.4 billion cash pile. This is no longer just some speculative story. They genuinely have the fundamental building blocks of a major defense player. However, the path to profitability remains the main overhang. They absolutely must prove they can convert this explosive revenue into sustainable earnings. And that makes Q3 the ultimate test. If they hit that $140 to $155 million target and the losses narrow, sentiment will likely shift violently in their favor. But if they miss, that 40% short interest is going to pounce, and the stock will see extreme volatility. Given the explosive upside of this defense tech transformation, mixed with those glaring execution risks we've explored today, the floor is yours. Are you bullish or bearish on Ondas Holdings? Can they execute this aggressive revenue ramp and finally deliver profitability, or will the sheer weight of these rapid acquisitions drag them down? Thank you for joining us for this explainer, and keep learning.